All right, hello and welcome everybody. It's Doug here with the LincolnList.com. This is the Stock Market Weekly Review for the 23rd of May. Hope all is well with you. We're going to talk about the markets. We're going to talk about the SPY. I'm going to share some ideas with you and hopefully something manifests in some nice little profits for you during the week. But before we do that, if you need some help with your trading or you're experienced and you're looking to hang your hat somewhere, share your ideas, visit the LincolnList.com. Take a free trial to our live trade room. Every day we trade live in real time right there on screen. So if you're looking for some help, you're trying to go to the next level, give us a shot. We'll see if our educational format can get you to that next level. Now let's talk a little bit here about the SPY, because if we leave off with last week's review, one of the things I was wanting to look at was the way the overall SPY just kind of behaved around the 50 moving average, because one of the highlights that I was talking about was how we finally got down into the moving average, the 50 moving average. Now we were there, if we just say recently, we were there at the very beginning portion of May, and we bounced off of that pretty strong. Now instead of what the market has been doing is most of the time when it's bounced off of these moving average, it ended up, at least recently, making new highs. It didn't do that. It actually pivoted back down and landed right back on that 50 moving average, and we began the week. And when we began the week, it was trying to hold on to that. And of course, now we're at the end of the week here on a Friday. We've lost that moving average. Now, definitely the market bounced up a lot more from its lows on Thursday. There was a pivot low here of 202.63, and it was a pretty strong day on Friday, pretty strong melt-up day. So there's been a little bit of a snapback. But I think, we might be entering some bear market territory, and I'll tell you why. Because, first of all, we haven't crossed the 50 moving average, since since the latter part of February, and that's really when the whole rally was really kicking into gear. We were down low there in January, early portions of February, and then it was way under there before, because the last time it really crossed that, going from bearish into the bullish territory, you were going into the later parts of the year, and then it sinks from 206 to 181. Now I'm not saying that's the scenario you're going to see here, but this 50 moving average has not come into play since late February. And now we're closing underneath of that, and closing underneath of that for the first time in a few months. So there could be a nice little follow through. You could see, I don't have the 100 moving average up here. You might see a trade down into that. We might look at some of these other supports. You've got 202, which has some interest, the pivots from the 24th of March. And then you got a little bit lower here, 197. So we'll see how it reacts. But, one of the things you're getting here, or something to keep an eye on, is there have been attempted rally points, and Wednesday and Friday were a couple of good days where you're seeing the market trying to rally but then getting sold off. And then Friday, yeah, you had strength, but then it's still closing off at the low. So there was a time when the SPY would just continue to grind out new highs. So we'll have to see how this plays out. As long as, if it starts continuing to stay under this 50 moving average, we might start looking for some more downside, but we'll let it play out. Doesn't always necessarily make a bit of difference in certain stocks, because what we saw this week was just mad buying with biotech. The biotech sector was really strong this week, and a lot of junk names, which I'm not going to go into detail with them, but stuff like Blue and Kite. I shouldn't maybe necessarily say junk, but they've been in a long-term downtrend. You saw some pretty strong bounces out of those. Some of the stocks I want to look at on Monday, I kind of tweeted about this one a few times on Friday, was this Keys. It's showing you the strength of the market. It's rare when you get a stock that goes so parabolic in the morning and is so reluctant to let go of something. Now, usually if you follow me on Twitter, you understand my strategy. When I short a company, I'm not saying that it's trash. My strategy is basically shorting parabolics, what I think is overbought. I've done videos on this. If you guys want videos on it, just say you want the parabolic videos. I'll send you. I got a whole library of this stuff that I've documented over the last 6-7 years. It's just euphoria. Once you get this point of euphoria, it doesn't matter what the stock is. The trend is unsustainable. So usually when you short these parabolics, they got a good 90% success rate on them. However, there are a few, just like every strategy, that want to be pricks. Excuse my language, but this was one of them where you got up in here and it didn't want to give up anything. And I still have a little short of it. I'm sitting right here at 29. I'm not even that far off. But this thing being up 16% on the day just didn't want to even give me up 30 cents. So it's rare that you get them to just para and rope out like that. But hey, that happens sometimes. I want to watch it again because I'm thinking now it would just be better if the thing just ripped Monday morning and sucked some more people in. It would be a lot better trade. It'd be making money. If it started to flush out, a tendency of these things is to rebound. So we'll see. I mean, it's up a lot. It's worth a look here because, especially if you get a vert move, if you're not already in and you get a vert move, you'd be looking at quite a huge percentage increase. Be something worth your time there to look for as a short. Also, something that has to start somehow viewing as a short, which, maybe a volume now is an issue. But this NSP, this thing really, I mean, you've got, if you want to call this a red, I wouldn't even call this a red day here on the 11th. This one was the only like real strong red day where this thing actually was weak. And that's on the 17th. So this rally starts after earnings, which was on the 2nd. You're going into a full month when this thing's had like one red day the entire month. And this was a $53 stock, now almost up $20 in premium with only one red day. I mean, this is, this is lining up to be a really good short. As I said, one of the problems that you might have here is you're not getting vert. And when I'm talking about vert, a really good example of the emotional or the vert trade that we're talking is this little piece right here, where you get that nice ramp up. You get a lot of emotional buyers, and then, educated traders start realizing they're up a lot and they start selling into all of this strength. There's a difference between amateurs and professionals, and when you're looking at the tape like this and reading the charts, you can tell who's buying or selling at a certain level. You can tell if it's smart money, if it's professional traders, or it's just fools chasing it. And you get these, you get a nice little pullback. Yes, it grinds back up. This would be the only way I'd want to short this for a day trade. I'm not sure you got enough volume here. Maybe even possibly for some of you swing traders out there, it might be even worth opening a small position off of any kind of vertical move. But this is definitely something that has to be pushed up towards the top of the radar for a potential at some point during its existence here. You might see, I mean, look at this chart. Gosh, that's just straight vertical. So we'll see what happens with this NSP. Also, I mentioned something on Friday was, haven't seen the name around, was WebMD. Let me pull it up here. WebMD. Get this right. I don't think I did it right. Hold on. I think I typed it in wrong. WBMD. WebMD. There it is. All right. This is a good looking bullish chart. Yes, I'm kind of recommending a buy here, but this thing is not bad. Look at this. It might be a little too stretched right here. This was the real buying was right when it took out this level. It had been messing around with that level all month, trying to get up in there to the 64s. And you can see the longer it takes these things to tap, sometimes they just keep tapping on these levels, tap, 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 and then they explode. And this one kind of did that already. 64.50s was the spot. So it kind of got stretched a little bit. I wouldn't chase into the strength here. Not right now. I'd want to see where it comes settling in. You got a little bit of a pivot here at 65.56. So maybe if it came down into this level and then based and then started grinding back up, I'd be interested in along with that. Now, outside of Friday being such a bullish day, you might be getting some misinterpreted readings. And what I mean by that is if you're a day trader and you're looking for extreme volatility, you might not get that. Same way with an NSP in this stock. There could be a question of intraday volatility where you could instantly get 40 or 50 cents. Yes, you got this kind of moves on Friday, but I think the tone of the market was so bullish on Friday, it may not continue like that. So this also might be something that you want to consider for a swing on a little bit of a pullback. I like the chart. This thing's in a longer term uptrend really since February, holding well all the moving averages. Just looks like it's something that's going to eventually melt its way into the mid 70s. So looking at a little bit of WebMD here to the long side. Now, also want to look here. Let's take a look at this MGNX. MGNX. Now, this is another one. We've seen a lot of these all week. You got PBYI, CXRX that did the same thing, ACAT, the list goes on. You saw a lot of stocks just ricochet off of the bottom here. So pretty good move, 16 to 22. Percent-wise, that's huge. But what you're getting here a little bit different, or one of the concerns that I'm having with all of the stocks really that I'm looking at now through the charts, is how you've gone from vertical to melt up. And I think I've kind of explained that okay during this whole video. But you got your vert here, which was good, and now you saw different kind of tape on Friday. You saw where it's melting rather than just kind of going vertical. So the reason I look at these is because after you're out of a couple of day run, if there's some way they start the day out, like you get a market gap, and you get these things to gap up 4 or 5% when they're already in day 3 or 4 of the run, those are sweet shorts because by that time people are really itchy to take profits, and you see these things pull back and fill in the gap a little. So MGNX, looking for a vert move on this one here. Would love to short it, and also SGen, as I said, been talking about pharmas, bio, healthcare. These things have been really the brighter spot in the market. These have been the stocks that have held up the entire week. If you're looking at what's the bull theme was pointed right at the bio, healthcare, anything in that sector. Like I said, I mentioned some of the chronic losers in there, EXPR, Kite, Blue, just traditional garbage that has faded forever, actually had some really strong weeks. So here's another one, bouncing off of 32 up to 38. So some of these now are in day 5 to 6 of their run. And, at some point, like with everything else, no matter what it is, it's going to come to this too shall pass, and these shall come down. And I think I'm looking at them here that maybe the rally is on this is long in the tooth. Not super. I mean, we've certainly seen longer rallies that go on for months, but some of these have made such large percent increases that we want to look at those. We really want to focus in on a lot in this sector, as well as some of these that really have been up in the 2 to 3 days, and try to capitalize on some really strong follow-through vertical moves into Monday morning and see if there's some way we can capture a nice little short. As far as longs, it's tough to kind of long these things after they've already moved 15 to 20%. You're cutting away a lot of your potential gain, because what you're really asking the stock to do is, once it's already gone up 20%, is you're buying it. Where you're asking that stock to do what? You go up 5%, 20%, to each his own, but it's kind of hard for stocks to do that. So let's kind of watch these to see how the market reacts going into the beginning parts of the week. And it's also going to be holiday week. We got next Monday off with Memorial Day, so you might see the action dry up a little bit as it comes in late in the week, but we'll see. As always, you guys need some help. Visit the LincolnList.com. Still have a free trial out there. Cost you nothing to visit, but every day, we have a good time. We try to make trading as fun, as exciting as it can be. We try to work together on everything that we do. So it's really unique and probably something like you've never seen. But visit the LincolnList.com. Other than that, you guys enjoy your week. I probably won't talk to you for a little while if you're just watching the video. So have yourselves a good Memorial Day. Enjoy the day off if you don't hear from me. As always, take care of yourself. Talk to you soon.